China data continues to show slower growth in that region, but Japan rips back almost 5%. Our markets continue to build after Thursday's key reversal at the 50-day moving average. Can Apple finally get going as they start the Developers Conference, with Tim Cook taking the podium at 1 o'clock? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are pointing to a higher open this morning after the reversal we saw last Thursday provided real opportunities for traders on Thursday and Friday.
Yes, if you pretty much blinked, you missed it, but if you were prepared and you watched the show, you knew that we were getting close to something. What exactly transpired to be, you never know, but as long as you have like a mapped out plan on levels where the 50-day is, where the prior day low is, you had a lot of time to make some adjustments both ways.
Well, so why don't you show us a visual then of the levels that we could have watched on Thursday and Friday.
There you go. Let's take a quick little backtrack, a little memory lane here, okay, which I never do. Kidding. Anyway, with that said, look at the trend here, guys. This is the trend back from November. Touched it here, continued along, touched it there when we touched a 50-day, back in April, and then here we were on Thursday. So with that said, you never truly know what's going to happen right around that point. So that's why we try and get you guys as prepared as possible. Now, if you saw this outside day, which we talked about on May 22nd, right? Here is when we went to as high as 1687, traded back below 1674. Lots of guys cleaned up positions, got rid of loose long. Some even went net short. And then if you remember, we then had this wedge type pattern get put in place, because that's when you don't know whether or not an upper level is going to hold. You put a lower high, another lower high. We had defined support right here. Then remember, last week or that other Friday, boom, it resolved. And then we retested it, and then we came into the latter part of last week saying, oh my goodness, we're now down about 5% off the highs. Everyone's starting to get scared. And at this very moment, you could have said, okay, I was just carrying some put spreads, whatever it is. This was your spot to make adjustments. Now, the red dog reversal tactic is once you trade through a prior low, this low is 1607, you make a new low of 1598, you cross back above it. That is your action area. If you were short, maybe you cover if you didn't cover perfectly, which no one ever does. Or maybe you get long. If you sold correctly up here, why not give it a try? So then what happened? You closed at, 1622, which was a nice move off of this low here, so about 13 handles. Then if you took some risk into the jobs number, boom, you got paid again. And then here we did close at 1643. And now we're coming in today, maybe even a little bit of a bigger wedge, and you might get some resistance. So I would say at this particular point, this 1650-ish, 1655 could be a little resistance. We're opening into it. Maybe sell a little bit, then I'd like to see some commitment higher. But overall, lots to do. Hopefully you made some type of adjustments, as we've been harping on this type of pattern for a few sessions now.
Right. Well, and also earlier this week, investors will be watching Japan as Bank of Japan gets ready to kick off, or is kicking off, a two-day meeting today and Tuesday. And we talked last week about opportunities in Japan with about 15 to 20% off its high. So what if we check in on, say, the EWJ?
Yes, and earlier in the week, I know that I went long some EWJ. You had a good overnight trade, and then all of a sudden reversed again, and everyone's like, oh, Red Dog, you got us good. I'm like, well, listen, it's never perfect. We were down 16, 17%. Maybe we hit the 200-day, maybe we go down 20%, whatever. And then all of a sudden, if you sold some and trimmed and trailed it, and you held some, you were still fine. Or if you said, okay, I'm going to wait for another pattern that maybe is more conclusive, then put on some, EWJ or DXJ or Toyota, whatever vehicle you want, you had another chance. So if you look here, so the first day we talked about it was right here. Okay, remember when it filled this gap? Okay, and then from there it gapped up into resistance. Okay, and then came back to that level. So if you hopefully sold some here, maybe you said, okay, I'm just going to get out flat. And then on this reversal, which I did not take part of, you could have got long again, or if you stayed in it, saw the reversal pattern, here was your appetite. Look at that move on Friday. And now, you're back into the resistance area that we also spoke about. So ultimately, this lower level, this was your outside day way back when on May 22nd. If you sold some of your exposure to Japan, this was the first time it really gave you a clue to do so. So you had the luxury of trying things down here. And now at this point, I think Goldman came out with a note saying they'd be buying the Nikkei futures ahead of Tuesday. Well, anyway, if you're in some, congratulations. Here's your next resistance, and there's the volatility's high there. Everyone's getting all worried about it or obsessing. Oh my goodness, 5%, 3%. But when you go up 50% and you pull back 20%, the ranges are bigger there. So hopefully traders are having a good time, because that's volatility for you if you know how to embrace it.
Right, and this two-day meeting could affect world market volatility, so investors will definitely be watching that. But during the pullback, well, of course, we always talk about looking for relative strength, and during the last correction, banks remain best in breed, hanging in there with Goldman Sachs at 2013 highs.
Yes, and I think on Thursday we also tried to list, the ETFs or the groups from strongest to weakest, and the banks were one of them that didn't pull back as far. So with that saying, that's relative strength, a rule that we try and follow, because it helps guide you where to put your money once the market, finds its footing. So if you look here at the XLF, you will see, look what happened here. Found support, through the 21-day, but didn't even get to the 50-day. All right, so that shows you, strength there, and that's why it rallied very well, very strong. Okay, and then you look for best in breed within a strong group, and that's when you have something like Goldman Sachs, boom, break into 2013 highs. Okay, this stock has been a leader for the banks, talking about all the way from back here in December when it rode the 8-day all the way up before consolidating. Remember last time 151-ish was that trigger buy? Well, here you are consolidating again, and now it looks good. I still think, Bank of America has opportunity where it's lagging a little bit, but, came in, held above the 50-day. That could continue. JP Morgan, there's, a lot to like there, but each day they take their turns. But so far, Goldman in that group is showing best in breed status.
Well, we also saw retail show relative strength. It got back, the RTH, the retail ETF, got back above its 8 and 21-day on Friday.
Yep, and, this group has, it's mixed. But overall, if you look at the overall sector, the RTH didn't pull back to the 50-day. Okay, almost got there, then reversed and gapped up higher, and looks pretty good. So at this particular point, I look at names within here. We'll go over some of them later, but overall, retail, I would say, with the banks is second best.
And industrials got back above the 8 and 21-day on Friday also, and closed on highs. So potentially, maybe we'll see some continuation in the industrials this week.
I lied. Industrials are probably the same as retail, right behind the financials. So you look here, look at the XLI. It didn't get down to the 50-day also, but also had a nice red dog reversal, little follow through. So now you look at this little descending channel here. So 44, big resistance there. Every time this has come in, it set up some nice patterns to get back involved. And at this particular point, here's your descending channel. It's defined, probably opening up into it. So I would say a lot of these things are going to be opening up into their defined resistance level. So hard to chase on the third day of a potential move, but it doesn't necessarily mean it's a short. It just means that, get prepared, see if it could hold higher here before going again. Same way, like look at this. You had a big move off the lows, and then it digested ahead of resistance and then went again. So let's see if that happens here.
And we had talked about in the transports, the IYT dropping below the 50-day on Wednesday, but quickly got back above it on Thursday and showed continuation on Friday with 2.5% of gains.
Yes, this one I would say, was more of a snapback, and but you took a lot more pain if you were an investor there. If you look real quickly at the chart here, this a few times has shown this head and shoulders pattern, but never, came to fruition. This was the last time. Remember the left shoulder, the head, the right shoulder, never broke the neckline. So now it's almost like you continue this higher, where that's bigger support, and then this time you had another micro one up here. Okay, but this actually met the measured move, which if you look at micro patterns versus a little bit bigger ones, this time frame was smaller. Came back into it. I'd say at this potential point now, maybe if it's gapping up today with the market, for a cute little trade, look to see if you could fade it into this 115-ish, because it was a weaker group. But overall, still trending higher, just that these sectors have a little bit more rolling corrections versus, the overall market. And this one went below the 50-day, but reclaimed it very fast.
And the utilities, of course, this is not one of the stronger ones, but it did show a little bit of relative strength coming back from its 200-day closer to the end of the week, but still didn't even get to the 100-day.
Right, but the utilities, this one actually had a macro head and shoulders pattern trigger. So for all the bears out there looking for something to press, this one gave you one of those pressing areas. And if you look here, here was your left shoulder with this. Okay, here was your head. Here was your right shoulder, and then you also had another little thing to throw in the boot, this trend line. So once it broke this trend line, that's when you could have got out or could have got short. Then it came, tested the 50, bounced back, and got contained. So if you miss this, that was your spot over here, and then you go to your measured move, it basically, hit it. And we talked about this. And now, we're right around the 200-day. It actually, traded through. It came back above it. It's been about 4 or 5 sessions. So I think this is not, a spot for traders to really focus on. If you're looking to buy some kind of value in the whole, okay, but this is definitely lagging, and you have to be a little skeptical here, even though it had a 2-day bounce.
Well, this is a little out of order here, but we should also check in on the home builders.
Yes, a little. This group, again, kind of like the transports where it led the market, it has to give some bears some hope, right? They already, oh my goodness, it was below the 50-day before the actual market. Meanwhile, it held where it had to again. XHB, you look here. This too, just like the IYT, remember this old head and shoulders pattern that never triggered? Stopped right there. You can go back here and you can draw this trend line and it stays intact. Okay, it's still no real follow through to the downside. Look at that right there. Bounced off of it. I would say this micro one triggered. These micro little, rounding tops or reversals trigger like here. But the macro sell-off or the macro continuation just doesn't seem like it's ready yet. So until it is, keep staying with the trend. So right now, this will be the bear spot to contain a bounce, which comes in right around here. We also, just so you know, some of us focused on Toll, Lennar. Still, they have something to prove here because these stocks came all the way down to the 200-day and still didn't really bounce with authority. So make sure that it isn't just a bounce to be sold. Same thing with this Lennar. Look at this. It's not showing such strength off these lows. So just keep that in consideration if you think it's just that easy to just buy and close your eyes. So far, this is your big support area for this. Maybe it tries to hold in there, and then here's your next resistance with that one.
Well, coming up, we're going to check in on Scott's thesis of going long the TBT and short the TLT. But first, quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Well, as we've talked about many times, in December, Scott had released his 2013 thesis, including 6 or 7 stocks to trade and different ideas about where he thought we'd go this year. And one of his ideas was that rates would go higher. And it looks like that is starting to gain traction now.
Well, it seems like every time we get some news that the economy is getting a little bit better, kind of like what we saw again on Friday, that thesis continues to strengthen. And we talked about being perhaps long the TBT, for a third in the drawer because sometimes it's harder to trade, or short the TLT. So with that said, I still think that rates are going to go higher, but it's going to be a little choppy here and there. So with the TBT, you will see that this vehicle, if you go to the chart, has been a bit choppy so far in 2013, where right off the bat, it had a really nice move up to resistance, but then failed. Okay, and then, if you remember 2 jobs reports ago, you had this nice little gap up. So that's when it changed again. In my swing trading course, I talk about how if something gaps up and doesn't fill the gap, it shows strength, it can continue. And since then, it's been hugging the 8-day besides this little test of the 21-day. So with that said, question is, we're going to knock on the door here again, and could we get through it? Okay, and I think that we do. Whether we have a nice trade there through this 69.5, 70 for a wide range bar to 72, I'm not sure. But ultimately, in the last few weeks, we've been talking about putting this in the drawer, just giving it 6 to 18 months, and especially if you have like some type of portfolio approach, that at some point, this gap all the way up here gets filled, and this would be a nice way to hedge against rates going higher with the TBT to the long side.
Well, part of that thesis, of course, was not just going long the TBT, but also going short the TLT. But is the trade right now really with the TBT?
It could be either one. You pick and choose what you're more comfortable. Some people are more comfortable watching a short on their screen. Shorting the TLTs is the same way as some people are more comfortable having a long on their screen. They can go with the TBT. And we've talked about this head and shoulders top pattern, which again takes time to play out, so you have to know your time frame. But ultimately, it seems as if we're going to get 100 here, so that shows you there's room. Look here at the chart. here's your left shoulder, your head, your right shoulder. Here's your neckline that we're already below. We have come down a lot from this 125, from April, but it's still heading there. Okay, next spot you have here, perhaps, for a pause would be 110. But ultimately, you look at this, distribution pattern here from 130 down to 100, or 110. I'm sorry. Takes you, a lot further down. So with that said, I would just, say if you want to be short or you play rising rates, short this, put it in the drawer. Don't really look at it. Or you want to put a stop, put a stop in a 120 or something like that. And then short term, just continue to, maneuver it both ways, and it's just a little trickier that way.
All right, let's do some quick hits here. Let's talk Tesla, which gave traders a nice trade on Friday, closed on high, so perhaps in continuation this week. How much room would you say it has until next resistance?
Well, what's interesting is, Barron's. Barron's came out with an article talking about the high valuations. I'm not going to get into the whole thing. You can read it. So it feels like every now and then when a stock, is performing very well, Barron's will come out with some kind of skeptical negative piece. And sometimes they are right. It just takes time. So the question is supply and demand still going to take over here? I think there was even some word out there that Musk hung up on the interview because he was just like, I don't feel like dealing with this. But anyway, if you're Elon Musk, you could probably do whatever you want. With that said, you look at the chart, and the chart's giving you a lot of different opportunity. Here is that gap up from last earnings. Okay, this is when it took out, that high and continued. Here was your first outside day, led to nothing. A test of the 8-day moving average. Then you remember this nice pattern, this nice descending channel here, broke to the upside, gave you 3 up days, and then what you have here, that red dog reversal, but this time you had some continuation where you didn't have one here. And then, it held a 21-day, acted well on Friday. Remember we talked about if you can get above this 98-ish, it could refill that gap, blah, blah, blah. So PS, it's down this morning. Okay, what I would do is I'd write down 96.70 right here. It's down about 4. See if Barron's really has that much control or not. So with that said, it could be an opportunity if, all of a sudden it shows some relative strength. Today goes from negative to positive and avoids it. If it happens to take out this area, it's going to need more time to build this upper zone because at times those articles do have effect, but I wouldn't abandon your long thesis if you said 6 months to a year from now I expect, or sooner Tesla to take out this 114 and see, 130 to 140. I still think that could happen. But, for today's action, if you went home long because of closing the highs, you did the right trade. Okay, most people would have done the same. And then today, depending on your time frame, use this as your stop. And perhaps for someone who's not in this one and down $4, it's an opportunity to see if it trades off the opening low.
All right, one long hit, now some quick hits.
Yeah, I just, a lot of people trade that in our community, and
No,
some people might
exactly.
even be long it, so I wanted to help them,
Right.
navigate.
Well, we talked a lot about Amazon being a standout in high beta tech. The stock broke out on Friday. Do you think we could see it take out the 52-week high soon?
It could be this week, in my opinion. I think that, during the correction, it just didn't pull back. It had this 6-month channel. I know everyone says earnings aren't great, the PE's high. I've said that too, but you can't fight the action. And overall, the stock did show a lot of relative strength during that week or week and a half we pulled back. And I said, let's target 270 to 272, 275, somewhere in that. Here, you'll see it by the chart that this was the trend line that's been containing Amazon, and then finally it held higher and pushed through. So I did go with Amazon on Friday, bought it, I think, somewhere around 271-ish. And now, if it takes out 280, your next spot really is 284.72. So with that said, it might have an inside day today. It might just continue to go. Amazon is very streaky when it wants to be. So if you are short, be careful. If you are looking to add to your longs, this is a spot, and then that's a spot. And overall, you look at the week. Let's just go to the monthly chart. Really strong, holding the 8th day, just poking its head right there. So there is a lot of money that has stayed with this. It's trending, it looks good. And then maybe all those call centers that it's been opening and all those people they've been hiring, at some point, their margins, it'll be a margin game. That's what the street talks about. But they also have to get their top line up in order for that to happen.
Right. Well, let's talk a little Apple, which bounced off its 50-day on Friday, showing commitment to the recent rally. And, of course, today kicks off its annual developers conference, potentially maybe you think providing a catalyst for the stock, depending on how it goes?
Depending on how it goes.
Yeah.
I think that everyone's built in that they're not going to have anything blockbuster. They're talking iRadio. They're talking a few different software upgrades. But overall, the stock has been hard to trust, and it's at times frustrating. This is one of those times in the last week or two we talked about perhaps a call spread that wound up not working. It went 0. That's why you do call spreads, because options is premium paid. As far as navigating the stock, there's been a few points. If you look at the chart here, you will see, first of all, that this downtrend has been, fast and furious from 700 all the way down to where those earnings lows were about. And then it did trade through this 420, giving us a nice spot to get long. And then now it's trying to show this inverted head and shoulders pattern. This sometimes could lead to a nice bottom, but it's still, people are skeptical. Left shoulder, head, right shoulder. And then last week we talked also about this ascending channel that it broke below. Okay, so that got me out of my stock right around, I think, 448-ish. And, but on Friday, Red Dog got back in again. Okay, I'm just trading what's going on here. What did it do? Short term, it held the 50-day, did a little Red Dog reversal, went below 434, came back above it, got me involved. It's gapping up a little bit today. I'd like to see it actually hold its gap. Tim Cook speaks at 1 o'clock. I'm sure the bears are going to try and sell it off. But if we can get a close above 450 with some volume, maybe then, the street will look at it a little bit better, and then you go back to this pattern here. And really, the next key resistance for this pattern would be, closer to this, 500 area. But first things first, it's got to close above 450 with some authority.
All right, well, and like Amazon, Google has been a standout in high beta tech. It had almost 2% of gains on Friday, and now reports that the company is buying Waze for $1.3 billion. Perhaps that'll lift the stock today.
It's up a little bit pre-market. The important thing here is, remember, you had that failure up at 900, and then I said, you know what, we could probably test the prior breakout, which was 844, and then maybe the 50-day. So on that Thursday, it reversed just like the rest of the market. Didn't quite get there, but it was close. So if you were short Google, you had some choices to make. If you were looking to be long, look at this descending channel here. Okay, it traded below this prior low. So if you want to use that pattern, that was 854, closed on the highs, and then it just broke this descending channel here. So, still has some room. This is resistance 1, where remember when it broke down from here. So we'll see how it handles that. Overall, looks very similar to this descending channel, right? Last earnings, descending, came above it, retested, and went. So right now, Google still looks good. One of the go-to stocks in the arena.
I'm actually wondering if this news of Google's acquisition of Waze could potentially weigh on Facebook today, because there had been reports a while back that it would actually be Facebook to make the acquisition.
Well, maybe the people are happy that they're not spending the money, so maybe they'll buy their own stock down here in the gutter. Anyway, with that said, Facebook has been disappointing. This was part of my 2013 thesis. It actually went to our target in the first 3 weeks, and since then has turned into a frustration mess. You look at the chart here of Facebook, you'll see, really the last time I stopped trading it was right here. Remember last quarter's earning, it broke out above and then failed. That's when I got stopped out. It looked a little bit better in here, and I haven't really looked at it since. But then on Friday, I did get long it, or maybe I got long it on Thursday. I don't exactly remember. It did a small little reversal here. So this got me in a little bit, and then it actually had an up day, and now it's opening up with an upgrade from, I'm not sure who, but it was upgraded this morning with a 29 price target, which I don't think I don't think it's going to happen. But anyway, if it can get through 2370, I do think that there is room to go to 2455. I did pick up a little bit. Let's see if it can gap up and hold. If that's the case, then I'll stay with it. If not, if Facebook will just not find the friend in me again.
Well, biotech saw a nice turnaround and showed some relative strength during the rally on Thursday and Friday. And Celgene had a red dog reversal on Thursday and nice upside follow through on Friday. So where's resistance now?
These bios that led the market, got hit pretty hard and then bounced pretty well. But I don't think they're going to start making new highs anytime too soon. But if you look at Celgene, which some people used as a vehicle, came into pretty big support. Did a red dog reversal through 111.78, didn't give you not much through. So right there, very small stop, nice bounce back Friday. But if you're trading it for a tactical trade, I would look to peel some off right here. Some might actually even look for a small short there. And then ultimately, it's going to take some time probably to trade in this channel and go sideways to absorb what has been a pretty enormous move.
Well, and for all of our gold bugs, let's just check in on the GLD and what are the levels to watch here?
Last week it was really interesting come Thursday because I got long gold when it looked like it was going to break this small little wedge pattern, which I remember the last time I did it, it got me good. So I was like, okay, I'm not taking this if this doesn't act right. So I think it was like 136.5, 137, traded through, came back below, but that was also the same time the market reversed. So typically the market's been strong gold week, so that got me out of that trade, thank goodness, because then on Friday you had that bad gap down. So anyway, look at the chart. A few different things to note here. Obviously, this was when the last time I wasn't sure which way it would go, around 161, and it broke lower. Here was your macro support, broke lower. Then all of a sudden, started to wedge here. If you look here, you know, thank goodness, you know, I had a view of trying to be long the market, because I was long this, and then I got rid of it at the end of the day, because I'm like, you know what, I'm long the market, I don't want to be long gold, and then pow. So I would say now, once again, if you're a macro investor in gold and you didn't sell it here, you better be watching 130.50, because if it breaks 130.50, then you know you could see 124 to 127 pretty quickly underneath.
All right. Well, beginning of a new week, what are you going to be focusing on as you head into trading today?
You know, I come in, I think, with 5 or 6 longs, 1 short. I think that into this up open, you trim some longs, and maybe you try and be cute as far as fade the spiders a little bit into 165.50-ish. You know, but then ultimately, I think, you know, the market's acting well, and it's better to have, you know, a bunch of stocks you like, some type of portfolio approach, because, you know, buying these things, you know, has been paying you, but, you know, prices might be a little bit more, you know, more emphasis, you know, the emphasis, because, you know, for the first 3 months, it felt like everything was just going up, and, you know, which frustrated traders. Now I feel like the market's going to be more selective, especially since we enter the summer, where we might not just get up and go. I'd much rather see some type of range, which we thought, you know, or we started to see get developed, and just trade it and find relative strength, have some longs, have some shorts, and, you know, and spend some time at the beach and the pool, or on the bike, or on the road.
Always nice. I go with the beach or the pool. But and with that said, happy trading, everybody. Have a great day.